Imagine you want to become the next Insurtech unicorn and you're looking for investments. What do? Where do you look and how? We interviewed Sabine Vanderlinden, Investment Advisor, to learn more about the Insurtech world. Welcome to this podcast where we explore innovation, investment, and insurance. I'm Philip, co-founder of the Engage Institute. We offer innovative training solutions for insurance companies worldwide. Do you struggle to capture the knowledge of your experts? Contact us. We'll record engaging interviews with them for you to share. Now, join me as we delve deeper into the Insurtech world together.
Today on the show, I have the great pleasure to welcome Sabine Vanderlinden. Hi Sabine, how are you doing?
Hi Phil, I'm very well. Thank you for having me today.
It's a great pleasure and I have plenty of questions for you. You obviously have a strong experience in Insurtech. You've done many things and I would like to jump right away in it. What is Insurtech?
So Insurtech stands for insurance technology. So it's a subset within the world of fintech. So think about financial technology startups. Within fintech, you have Insurtech. The fintech investment market, and we look at it from an investment viewpoint, is around $690 billion invested dollars so far. And then when you look at Insurtech, it represents 67 invested US dollar within insurance technology startups to date, which is representing approximately 10%. There is an interdependence between fintech and Insurtech. However, when you look at insurance technology world, or I would say corporations wanting to find technology partners to enable them to augment and reinvent their operation, they would usually look beyond just insurance technology or financial technology, because insurance touches everything. And so whilst I don't want to change the title, I pretty much do technology for insurance, which means I will look at artificial intelligence, cybersecurity, and all the exciting trends.
We're going to talk about that. Insurtech, was it around 2010 or something that the word was coined? Or how old is Insurtech or the technology of insurance?
So I would say it's probably a bit more recent. I remember going into fintech around 2014, actually, and getting to see financial technology platform coming out, partly payment platforms. Insurtech, as a terminology, came out in 2015 and became probably more widely used in 2016. The first actually insurance company which coined the word Insurtech was AXA, when they went with a big bang and launched AXA Strategic Partners, which is a VC fund where they, at the time, I think, put $250 million to $500 million to start investing in technology startups within insurance. And then they also set up a corporate venture builder called Camet. At the same time, you would have investors like Anderson Axel, which started looking at insurance technology. And they realized around 2015 that insurance was ripe for innovation. And so from having trickles of investment before 2015, the first major numbers, going into billions, 1 to 3 billion, started in 2015, 2016. And that's where and when insurance companies started feeling uncomfortable around technology companies coming into the market.
So what do you find interesting about it?
What I find interesting about insurance technology or Insurtech or technology to enable corporations to do better, to serve their customer better, is we are looking at the future. So we are looking at trends which are affecting our market every day and starting making sense of those trends. So think about the future of work, cybersecurity, the digital economy. All those things are intertwined and interlocked trends, which needs to be broken down into a clear understanding of what they mean. And then starting developing what I call a roadmap for, in my case, corporation, to start embracing technology enablers to help them become resilient or relevant, more relevant for their customers as customer change as well. I was reviewing this morning a piece of research from CB Insight where as of now, there are more millennials, which are surpassing even us, Gen X, in the world, and at least in the United States, which means the product and services we are designing needs to be different from the product and services from yesterday.
Do you find the insurance industry that it's welcoming change?
So I would say, let's assume there is 5,000 insurance companies across the globe. I would say the top 100, or let's think in terms of Fortune 500, within that there is a number of insurers in that group. Those actually do not have a choice. They have to innovate. The same way that Nike, Adidas is innovating, or the like of the big tech, Google, IBM, Amazon are actually investing in innovation every day. So it's a difficult question to answer because I would say the top companies do not have a choice. They have to innovate, even though they are uncomfortable doing change, because at the end of the day, insurance is a risk-averse market. They take a long time to make decisions. So some of them will do it because they don't have a choice. Others are probably a bit laggard at taking their time. But I don't think any businesses have a choice today. They need to innovate.
Yeah. So you're the Queen of Insurtech. So how did you become the queen?
So that came from the startups I accelerated over a number of years. So from working for large corporations such as IBM, FICO, Pega, at some point, I realized that I needed to reinvent myself. I went to a small company to really understand what this fintech world meant. And after that, I started bootcamp Insurtech in Europe and in the United States. Through that process, imagine 7 years of doing that, I accelerated over 100 startups. But to be able to accelerate that number, you need to scout a lot.
So how do you scout them? How do you look for them?
Is a process where we look at big problems that are often thrown to us by the corporate companies we work with. And based on that problem, we start really defining what it means. So we are defining that problem statement. What are the challenges? What are the opportunity affecting that specific topic? Think about cybersecurity, for instance, which lead to cyber risk prevention. But first, you need to understand the landscape of cybersecurity. And from that, we start identifying, I would say, from an operating model viewpoint, areas which can actually help us change the operation of a business, and then scout. So then identify the really best companies which can solve for that problem.
Very concretely, how do you do that? You look on the internet, you Google that. How do you actually do the scouting process?
So the scouting process requires a relationship and connection with companies, or I would say hubs across the globe. So with 7 years building acceleration program, you develop a lot of relationship with a lot of hubs across countries. So it's about relationship building with the hubs, which are usually welcoming ventures, giving them space to operate from, and also give them services to actually accelerate their business. And then second would be databases. As I mentioned, we use a lot of technology databases to actually enable us to actually start identifying the trends and identifying the startups which fit within those trends as well.
So once you have identified some startups, what do you look at when you invest in a startup?
So now looking at investment and startup, there are a number of criteria one needs to look at. I would say if I put my investor hat, first I will look at the founding team, whether it's a diverse team, and what is their pedigree in doing what they say they are doing. That company needs to have a why, a purpose, and the people running that company needs to be really committed to that why. So the why they are doing something and their background around the topic they are trying to solve for is going to be important. Then it will be about the problem itself and how they are going to solve that problem, what type of technology they are going to leverage for solving that problem. So when we think about technology startups or Insurtech, there is a technology angle. And now, as we know, with the hot trends around artificial intelligence and generative AI, most investors will actually look at whether the platform includes such type of technology, blockchain, how they process data, so on and so forth. So technology will be a big ingredient as part of that selection. And third, We look at how they're financing themselves, whether they're truly committed. An investor will look for in startup which actually invested their own money in their own businesses. So what we call friends and family and honor-based investment before putting any money. So we'll look at the money coming in, how that money is being spent, and then start looking at projection, unit economics, and whether the financial trends or the financial forecast makes sense, actually.
What is an average ticket nowadays in Insurtech, if there is such a thing as an average?
The numbers have come down. I would say, is there an average? Early stage, and it depends around the achievement the early stage startup want to do, but it can range between $250,000 to a few millions. And I think the numbers have come down from 5 million, I think, to around 2 million at the moment, because the investment money and rate of interest and inflation have pushed that down. So startups are getting less money. Now, when you start going into higher series, which are moving from seed to early stage to mature stages or scale-up stages, those can range between 25 million to 100,000. I would say that a startup on average to reach their unicorn status will average around 150 to 250 million in funding for the best performing ventures in the market.
And a startup that has done all the minimum viable products and all these things just before the scale-up, what kind of valuation do we look at normally?
Before scale-ups, it can range. So I would probably want to talk more in terms of years. So today, on average, it takes 7 years for a startup to reach unicorn status. However, the generative AI startups can do it in 5 years right now, despite the drop-off in investment. So I would say early-stage startups will have in insurance work probably a little bit harder. I would say on average, it would take 5 to 6 years for an Insurtech, pure Insurtech, compared to a tech company serving multiple markets. As I said, a Gen AI at the moment can be reaching unicorn status in 5 years.
You talked earlier about corporate venture capital versus venture capital. Can you explain us what the difference is there and how to choose one over the other one?
So a CVC is a company, a venture fund, which is funded by one single company, the headquarter. So if you think about Nike or let's say MS&AD in insurance, for instance, you have an insurance company here, or you have a corporate company which has set up their own VC fund with their own money to invest in startup. A VC will actually may have LPs, limited partners, which may be a Nike and MS&AD as companies, but the VC will find multiple limited partners to create itself and then invest in startups. So the owner of a VC will be limited partners, whilst the owner of a CVC will be the corporate office itself. And what you find is they are not mutually exclusive. So Nike may invest in VCs and be LPs in VCs as much as they can have their own corporate VC.
So when you're a little startup, which one should you look at? Are you going to looking for CVCs or are you looking for VCs?
For startups, they can look at both, and that's the point. VCs usually give investment based on financial returns, and their main goal is to deliver financial outcome to their limited partners, while corporate venture fund will be much more strategic. So they look more at strategic returns, meaning partnership power, entering to new market, access to new technology. So a startup will need probably to look at both. It depends as to who their customers are. If you're in B2C, maybe corporate VCs. It will depend on the strategies. A lot of startups have been, tinkering with, should we go for corporate VCs? Because if you attach yourself with one single VC, which is a corporate, it can affect, it is believed, your ability to sign up with other corporates. But things are changing. And I would say beliefs as well are changing more and more. And with current market circumstances, actually CVCs are very hot. Because as I said, it's not only about financial returns, it's about strategic returns as well.
Where do you find these CVCs?
The CVCs will be everywhere. I mean, if you look at the corporate, and the corporate is in the United States, their CVC will likely be in the United States. So the CVC is not sitting into a different office than the corporate office. So they will usually be very much linked to the company they are supporting.
But do you look on the website and say, hey, these companies of interest to us? So you type the name like Nike, CVC, and you will find the CVC. What's the name of the department actually?
It would be Nike Ventures, right? So
Okay.
you look for Nike and then you will look for Nike Ventures. Look at MSNAD, you will look at MSNAD Ventures. So that's the way you will find them. They may actually be listed on the corporate website, but usually they would have a separate website because the best CVC operate as independent companies of course, but they will still be located in, and I think location is very important because startups wanting funding and their core market, let's say, is in Europe, it's unlikely they would get funding from a CVC located in the United States. So really understanding where the corporate HQ is located can also help identify where best to look for the CVC rather than just randomly for looking for CVCs.
You just spoke about the different areas, the markets. Now, very often when you write one of these business plans, investors say, give us the true market size for your product. So how do you find really the true market size for an offering?
I guess the startup needs to have a clear understanding of their business model and their value proposition. The value proposition will be linked to a specific target market. And so they will have to really start looking at numbers related to that target market. So if I were going to build a proposition targeted to millennials or Gen Zs, I would have to size the millennial market and Gen Z market globally for the countries I'm going to go after. From that target market, I will want to understand my serviceable market, meaning based on the solution I have or I've put together, how many of the Gen Z or millennial will want my product or any product within that group, which means increasing the competition as well. And then from that, we can actually understand the true target market, which would be a percentage of that serviceable market.
Another challenging part very often is to find the pricing. Most startups have the price lower than it should be. So what would be your advice to price your services?
Well, to price services, you definitely need to start with understanding your serviceable target market, but you also need to test the market. And it's why using an iterative design thinking method become very useful, where at every step of the customer journey, you have to test whether the customer will want that product, and you also have to test at what price the customer will want that product. So that's where you do some A/B testing to actually try different pricing strategies to see which one is much more likely to resonate. But at the end of the day, the price is a customer, right? If the customer is not prepared to buy the product, the price is too high as well. So it's really always finding the right balance between high price and low price and actually tinkering within the two range to find the right price. But at the end of the day, it will be around financial modeling, right? So as you define your target market and you actually identify your cost base, how much it costs to build the technology and to develop it, and what is the yearly cost to build X for a period of time to reach Y target market, that will end up be the best way to size and define pricing.
What about freemium models? Is this something fashionable these days with software as a service? And if yes, what are the key components? What should be a good freemium model?
So a freemium only works if it's about providing value services on top of a product. I don't think per se really is the right way to go, because at the end of the day, the freemium is the first stage of a SaaS model. So usually if you do SaaS, you'd have, maybe have a free option with very limited services. And then I start building my silver, gold levels on top of the freemium. So do through freemium exist in insurance? Unlikely. It will just be the first stage of a SaaS model. Partly when you do insurance is not free, right? So if people are going to sell an insurance product, at some point there will need to be a price. But the freemium option is good for educating a customer segment around the value of an offer. So a lot of us are still uneducated around cybersecurity. So phase one of enabling a segment to understand the value of cyber risk or cybersecurity prevention solutions would be to educate them. So the freemium model would be, let us do a digital footprint analysis, let's say, for free, just to give you an audit of where your risks are. And then from that, you can actually go into a paid, because now you have an audit and an evaluation, and then you can help the customer buy the best service.
Okay, I see that. And you speak about educating. Do you think that the insurance industry as a whole proposes good training to end users or even to their own employees? Or could it be improved in any way?
From a corporate viewpoint?
Yes.
I mean, corporates have resources and they know that they have to train their employees to understand how best to serve the customer or protect the mothership from cybersecurity risk. So I would say all companies will have some type of cyber risk training that you can access from either external platforms or they have built it in-house. As an example, it could be anything, which they would do on a yearly basis. And employees then will need to demonstrate that they have gone through the training and they have a certificate to enable the company not to fall in disarray. So I think, at least in insurance, training is very prevalent. I remember my time working with insurance companies or within insurance companies or now supporting them or even consulting firms. Training was probably 5 days of a year where you learn new skills, you will just learn new capabilities to help you grow personally, but also to enable the business to stay safe.
You're speaking about training, and it seems quite important in the industry. Have you seen any insurance simulators, underwriting simulators to train people to really understand in the different companies how to sell insurance? Have you seen anything like that?
So I've not seen it per se, but I know some insurers are developing such capabilities in metaverse environment for their brokers in particular. So a number of insurers have realized the value of virtual reality environment and metaverse-like environment where they can actually create simulations of a good sales process, bad sales process, or how to position a product more effectively and being able to do that at scale. So I do see some. I would not say that it's widely spread across the industry just yet, because many are still working out their path to leveraging virtual environment-assisted learning to enable their employees and their partners to be more effective. But I would have seen it in big tech as well. For instance, things about IBM. I've seen them doing that.
And the metaverse, now that you are naming it, is that a good system for training? Because, like, for example, to train in simulating a client interaction, is that the best way to do this in a metaverse?
It's one of the options. I would say when we start talking about immersive technology and feeling and being able to feel as much as we can learn, the more senses we can actually apply, the better the retention will be. So I do believe that virtual reality and metaverse linked environment, so immersive environment, are a great way to train. And I think even the educational system is going to change massively in the future to see how we are educating students and enabling them to learn the skill set that we need for the business of tomorrow. But in class and being able to interact with people are as important as well. So I would not say one or the other, a combination of the two. The hybrid option would probably be more valid approach, because otherwise you end up having people learning alone all the time, whilst part of the learning is about interacting with others and exchanging ideas with others. So finding the best way to combine meeting people and learning alone in an environment which is conducive to acquiring knowledge in the simplest way as possible should be very powerful, I think.
We speak a lot about the metaverse, but I think it has a special meaning of the Web3 and a lot of different other concepts. Do you mean more like a virtual world where you could simulate 3D interactions? Or do you really mean the metaverse as potentially, if we use the definition of a web of different virtual worlds where you can move from one to the next? Is that your definition of the metaverse?
Yeah, my definition of the metaverse will be very much a sandbox type where you have metaverses, so multiple worlds, where you can hop from one environment to the other. Now, I know we are still very early stage and people cannot stay many hours on a metaverse-like environment because it's quite tiring to the eye, but things are going to be evolving in the future. But yes, I'm talking about multiverse, and so one environment where I can go and learn about insurance, but next minute I can go into another world, learn about cybersecurity, and then go into another world and maybe learn about social media, influencing, or whatever. So being able to hop into different verses, metaverses, where I can actually access different teams, different world, different learning patterns, and different content as well.
Is there any such metaverse now, even just a virtual world, but about insurance and insurance training? Is there anything like this on the market?
I know some insurers are working with the platform from Meta and trying to see what that looks like. It would be Google as well, AWS as well. And so yes, I've seen companies do that. I've seen companies using those environments for their brokers, but also partly the one with a strong sustainability strategy, who do not want people to continue to take planes and travel around the world, are moving to this type of environment, which are actually more conducive to be immersive. Because if you are actually not able to travel and need to interact with people from all around the globe, metaverse environment to allow engagement, events, interactions become really useful environments to enable those interactions to take place without having to travel from Asia to United States.
Yeah, and save the resources from nature. Apparently, the metaverse is something that is here to stay or to develop. You also mentioned the blockchain earlier. There was different attempts in the insurance industry with the blockchain. Do you see it taking it like saying, yes, blockchain is great, or do you rather see it like saying, blockchain, let's wait and see?
So I think the blockchain is like a nail trying to find a hole, right? It's what problems are we trying to solve with the blockchain? And a lot of the adventure of the blockchain insurance has been around smart contracts. It's been its hypes, it's been its downfall as well. I think the blockchain as a capability, as an enabler, I will just call it tech, is something which can be transformational in the sense that can take a lot of cost out. But is it really about the blockchain? It's about the capability itself being used to capabilities, provide maybe more safety to specific digital assets. And so maybe the spin around blockchain has not been the right one. For me, it's just a component of the many components which are required to deliver a solution to the market. The way Zonghorn and Pinghorn have been using the blockchain is by integrating it in a strategy called the ABCD, which is about artificial intelligence, big data, cloud, and blockchain. And so when you actually start looking at using those capabilities together to solve a specific problem, that enabled those two companies to serve underserved market segments and enable them to access insurance for a few dollars per month. And so the technology has been able to take cost out of the operation, so therefore offering a product which is simpler and cheaper. And I think that's a mindset. So what do we want to do with the technology rather than just the technology for the sake of the technology?
So basically, if you combine the blockchain in these ABCDs, as you were mentioning, then it would be a paradigm for micro-insurance or embedded insurance, yeah?
Correct.
Okay.
Now it's very much used for parametric insurance. So you can create parameters, and if the parameters are met, then you pay the insurance without going into a claims department. So that's where technology becomes useful, or what we call DeFi, decentralized finance in insurance, able to decentralize aspect of the digital asset and then insure macro assets rather than having to insure everything in one go. So that's where you start looking at innovation, where you can actually start breaking down things in macro bets and be able to insure them like NFTs, right? At the component level.
Now, we're living in special times with a huge crisis around us. So what is your advice for startups or any companies for that matter to stay relevant in these turbulent times?
To stay relevant in this turbulent time, I think companies and individuals need just to be out there. they need to be present and they need to be visible. The main reason is we have all moved to remote working or hybrid form of working, where we are less face-to-face with our clients and now with our teams. And so for business not to be forgotten, they just need to be more visible. So when there are crises, it will be less around reducing marketing costs, for instance, which is usually what most companies do. That, however, in times of uncertainty, being visible socially, face-to-face, going to events becomes more and more important. So that would be my main recommendation, Phil.
So remain visible and don't save on your marketing costs.
Well, reduce it, but be smart where you're reducing and have a longer term strategy than short-term hiccups, because that is not going to be conducive to growth in the long term.
Yeah. Now, about growth, the sales cycle seems to be quite long in B2B, especially in the insurance industry. How can you speed up the process? What can be done?
So the sales process in insurance, yes, is long. Insurers are risk averse, so they are going to evaluate every part of a potential proposition and whether they can actually work with the tech ventures coming to them. So the aspect of trust and authenticity and integrity plays a very big role within insurance to make sure that no one damages one's reputation as well. So how to speed the sales process? I think for any startup looking to work with insurance corporation, I would look at whether they have an innovation team and whether they have a much more industrialized and democratized way to working with ventures, because usually you have a second process which do not apply to the startups to actually get to work with those ventures, with those corporations. So they would have what I call an hybrid or ambidextrous way to contracting with vendors. They would have the set and long process with the big players, think about the AWS or the Google, where they are used to knowing they are big enough and they meet all the criteria so they can go through the normal procurement process. But usually they have a parallel procurement process for young ventures that they can go into proof of concept or commercial pilots and start working quicker. The other one will be looking at the corporate venture area, because some companies will want to partner first and invest second. So going through the corporate side would mean going into the innovation team, the venturing team, or the transformation team. Or if we are going for the corporate VC, the ABC Ventures area, which is sitting alongside the corporation, then they will look at it from an investment viewpoint. So playing both investment versus partnership will be important, and looking at whether they have a venture fund will be important as well. Because the venture fund, if they like the solution, will also make the introduction to corporates, to the corporate side.
Oh, great tip. One of the last questions now. You're part of Invest Tokyo. You spent some time in Japan?
No, not me, but my husband actually spent 10 years in Japan. He's a fluent Japanese speaker. I have a lot of insurance partners I've worked with in Japan. Some of the leading Japanese insurers, I've been working with them. And I actually appreciate and really like the culture, which is based on knowledge and respect, actually. But Invest Tokyo has approached a number of influencer ambassadors all across the globe to help them attract talent and startups into Tokyo, into Japan. So we are a group all around the globe where startups reach out and want to go into Japan. We help them understand what it means to go to Japan and make the introduction with the leader within Invest Tokyo and the metropolitan government of Tokyo to get those startups to have a launchpad when they go to Japan. So with an English-speaking team over there who is able to teach those ventures how best to succeed.
I worked for many years ago in Tokyo, and I was amazed because at that time, 20 years ago, we had something called WAP, a web page appearing on your mobile phone. For nowadays, it sounds ridiculous, but at that time, it was quite amazing to be able to go on a web browser from your phone. They were much ahead. So I had a feeling, wow, there are some jewels in Japan that had not come out to the rest of the world. Is Japan still ahead in that innovation, or has it moved to other countries like Korea, China, Taiwan, or what's the status of it in Asia?
It's an interesting question to answer, because if you actually look at it from a unicorn status, I guess there are very few unicorns coming from Japan. There are some, but fewer than in America, India, China. So from that metric, I guess, question mark. But from my interacting with Invest Tokyo and the innovators in Tokyo, I would say less so in finance, but manufacturing is where still Japan is leading the way. But to answer your question, when you do the divide around where the ventures are, probably 30% are going to be in the United States, another 30% will be in Europe, and the rest, 30%, will be in Asia, with the biggest chunk coming from China and India.
Great. So, Sabine, it's been a great pleasure talking with you. Is there anything we can wish you for the 2 years to come? What is your deepest wish there?
My deepest wish will be to find more corporations, so insurance companies and finance companies, who embrace corporate venturing, which is that balance between partnering with ventures, investing in them, and then the last bit will be M&A, right? I think in insurance, you see a lot of merger and acquisition at the minute, because of the way they actually scale by acquiring other insurance companies. Where the opportunity lies in the future would be in increasing the volume of partnership by adopting those ventures, so applying the right framework for adopting those ventures, and also investing in them. We reviewed probably 1,000 CVCs at the end of last year, and still evolving our research. There is only 30 insurance CVCs within those, and within those 30, there's probably 5 who are actually performing. So there is a long way to go.
Wow.
And so being able to bridge that gap between corporate venturing and finding the right ventures and ensuring that we can actually allocate capital, resource, technology, knowledge to those which deserve it the best. I would love that wish to become reality at scale, right? Not macro things, at scale. That would be my wish over the next 2 years.
I wish you to reach that at scale, Sabine. It's been a great pleasure talking to you. Thank you very much for sharing this wealth of experience from the Insurtech world. Thank you very much. And I hope to catch up in some months from now and see how things have evolved.
Thank you, Phil.
Take care. Ciao, ciao.
Take care. Bye.
That's all for today's episode, where we brought you some of the latest and greatest from the innovation, investment, and Insurtech worlds. Thanks for listening, and thanks to our guests for sharing their valuable insights with us. Do you struggle to capture the knowledge of your expert? Contact us. We'll record engaging interviews with them for you to share. This interview was made possible thanks to our colleagues Laura Servadio for the coordination of this interview, and Patrice Séjalon for a powerful remote interview studio based on AI. If you enjoyed this episode, please subscribe to our channel and leave us a review on your favorite podcast platform. You can also find us on YouTube or LinkedIn, where you can watch the full video of this interview and many others. Until next time, stay safe and stay insured. Cheers!